Welcome back to another advanced price action reading concept video with NJT Burton. I've been trading price action for over 10 years. So you want to find something that is repeatable, that works on a consistent basis, and that is sustainable over the long term. So that when you do learn this, you won't have to keep learning new strategies and systems, but you'll have something that's with you for life. And you can use this on every single time frame on any pair in any market to read the market direction, which is the cause for all of your winning trades. So in today's video, I'm going to share with you the best way to read the market direction using a repeatable framework. So the first thing that we always want to do when coming to the charts, when we're starting to think about how to identify direction within the market, is we want to mark out the zones where price has slowed down. And we'll come to why in a second. But all we want to do when we're starting to understand if price is slowing down or it's moving aggressively is we want to be looking at the price action, right? Aggressive markets are very volatile in one direction. They have a very clear movement in one direction as well. And we normally see candles closing near the highs or near the lows, depending on whether we're moving to the downside or whether we're moving to the upside. As we can see here to the upside as well. Very aggressive candles here to the upside. These are movements that are very aggressive. These are called initiations in the market. These initiations will always come from a previous sideways ranging market. So if you can't identify a sideways ranging market, but you find it easier to identify these areas on the charts where we're seeing lots of volatility, this is perfect because all you can do is go back and find the sideways ranging price action that price has come from. Again, we see here to the downside as well. Prices move very aggressively in one direction. Again, here as well, very aggressively in one direction, and so on and so on. What we're able to identify on the charts when price is moving very aggressively is a previous high volume area. We know it's high volume because of the amount of movement that's come from a previous sideways market. So that's all our initiations on the charts. That's going to help us to identify where prices overall move sideways. So let's draw on all of the areas on the charts where price has been contained sideways. So here we can see price overall has been contained sideways, and then again we see the initiation here to the downside. Again, then price started to move sideways here, overall sideways price action, before we saw an initiation here to the downside. Then again price had this sideways price action here again. Before then we broke out and we saw this initiation here to the downside, and then overall we can just use this entire area here where we're starting to see those low momentum candles on the charts before price initiates here to the downside. So these are all areas where price can pull back into in the future, and we can potentially play that intention to the upside or to the downside again. What this actually sets up for us is an understanding of where the high volume areas are on the charts, and what these areas are on the charts is previous areas where we have seen high volume in the markets. This is how we're training our eyes to read this price action, so that when price moves back into these areas in the future, these are going to be our possible trading locations where we can play that intention again. Now, the title of this video is predicting the market before it happens. So how can we use these high volume areas on the charts to anticipate where price is going to react from in the future? Well, this is where we can utilize our pattern. Our pattern at RAMC is a sideways range, which is the first part that we just identified. This is a high volume area on the chart. We know it's a high volume area because then we see the initiation, which is that volume moving in that direction. Now, when price moves back here in the future, back into a previous sideways range, what we do is we get the mitigation phase of price, and then we anticipate the continuation phase. This is a bearish order flow pattern. This is a Banks order flow pattern in the market. Now, I don't need to guess this because the markets are showing us. When we react from these previous sideways ranges, we are seeing the next phase of price, which is that aggressive phase to the downside. You only have to look within price to see that this is a pattern that is constantly playing out over and over again, which means that we can start to identify areas on the charts where we want to be looking to execute our trades from in the future. Now, if this pattern comes from a higher time frame, let's say like a monthly or a weekly or a daily or a 12-hour chart, and we're at this point of mitigation here on a monthly chart, and we start to zoom in here, let's say onto a 15-minute chart, and we start to see bearish continuation moving away from this location, think about the amount of opportunities we're going to see with a very clear direction within the market all the way down into that previous swing low, because we understand the RAMC pattern and because we understand the phase of price that we're in is that continuation. So this is how we're able to predict these moves before they happen, because we understand this pattern within the markets and we understand how to read this pattern from a higher time frame and how to zoom in and execute our strategies at these points of mitigation for those continuation phases within the market, which are the most fruitful phases within the market as well. So let's just go back, right? One thing that people always say is not every range plays out, and that's the truth. Not every single range in this move is going to play out. The ones that do play out are the ones that are at the best locations on the chart. So this is why we use this fib tool. If we take our swing high all the way to our current swing low that we have on the charts now, this is our swing point high, this is our swing point low down here. This gives us a price range, and what a price range gives us is average prices, which are in the middle, and we have high prices and we have low prices. Of course, you guys have all heard buying low and selling high. This is how we're able to look for specific locations on the charts or specific ranges on the charts that are at sell high conditions. And these are the ones that we're interested in. We're not bothered about these ones at average prices. Yes, we can look to potentially take profit in these locations because overall we're only looking for 30 pip moves in order to make profit. And we can see a lot of these moves, they're moving more than 30 pips. We can see a 40 pip move here. So obviously if this is aligning within our session as well, this is a potential area, but this is a lower probability location within the charts. We want to be putting our mind into the highest probability locations so we can maximize our potential returns on our trades. So this is another concept that you'll learn in our price action course, when to use the location tool and how to use the location tool in order to find the correct ranges to play in the leg down. So a lot of traders, they'll look at RAMC here, range, initiation, and what they'll be doing is, because we've seen this bearish initiation in the market, they'll be looking for that pullback into that sideways range and play that continuation to the downside. Now what a lot of traders do as well is they'll try and play the reaction from this previous sideways range. They'll put their stop above the high of the range and they'll try and play that as their continuation to the downside. The problem with trading here is when we're thinking about our A to B price range, are you selling low or are you selling high in this move here? Now, to increase our probability of the trades playing out, we want to be selling as high as possible and staying away from these RAMCs that are at low prices. So we can see that price is reacting from this area. We can see that every time price comes back into this previous sideways range, we're seeing reactions, right? We are seeing price moving away from this location, but we're not seeing any strong reactions away from this location. So we can start to identify that with this information that we're seeing here on the charts, that these are the sorts of opportunities we want to be staying out from, and we want to be waiting patiently for price to move up into better locations. So this is how we're reading the price action to start to make better decisions in the future. Now we can see when price moves back into premium prices, which is above this 50% area, this is where we're starting to get more sharper reactions within price. Here we're seeing better prices. The banks are finding previous better prices for them to look to sell their positions again. So these are potential opportunities that we can get involved in, but still they're at overall average prices, right? We can identify that there's a high volume area here on the charts. We are seeing the reaction from this area, but we're not getting any follow through. And follow through means that this sideways range has created this initiation that's created this low. So in order for this pattern to play out and continue, we would have to see a mitigation, which we've got here. And if we follow through on that intention, we're going to see price target this low down here again for that continuation. If we react and we don't follow through, that means that we see a reaction within price, but we don't get any continuation down into the low that's been created within price. And all that means is that this range was not created in order to see a move into lower prices and take out this low. It was created as a liquidity point for the future in order for price to target it for liquidity for higher prices. Now we also see this massive sideways range that we have here. This is also at a better location, and we can see on the charts prices come into this area. We've seen a very small reaction within price up here, and we've not seen any continuation here to the downside. Price has just blown straight through this area, and we've moved into a sideways range, which is right at the edge of price. Now, this is where prices started to slow down, right? Where we think about where we are within our A to B price range, this is at the absolute best price. This is the highest price within this A to B price range. And it's the last sideways range within this A to B price range where price can react from and potentially see that intention again in the future. Now, we don't trade, this is a 30-minute chart right here. We don't trade the markets by just putting our entries here and putting our stops above here and playing this as a continuation to the downside. We don't trade like that. We don't need to trade like that. We can utilize our entry strategies at these locations here in order to maximize our profitability on these trades, and so that we don't have to take our risk in these areas by predicting where price is coming from. We just have to identify on the left hand side of the charts where the volume is. Then we let the price show us its intention again, and then we can trade alongside that intention to the downside, because this is a higher time frame RAMC, which means if we continue, price is going to target this low here to the downside. Now, when we do move back up into this location in the future and we see the intention coming into the market again, where we see this aggression and speed in the market, where's that come from? It's come from a previous sideways ranging market here. We can utilize our pattern of range initiation. When we pull back into this range here in the future, we know price needs to react out of this high volume area again. And then we can play that phase of price here when it lines up within our session for that continuation to the downside. And the first target for that RAMC pattern, which is created here, range, initiation, mitigation, continuation, is always going to be the low that we have down here. Now, also because we're trading this higher time frame sideways range, initiation, and we're at that point of mitigation every time we come back into this previous sideways range, we actually have direction for a few days to play continuation here to the downside into this low. So we don't need to predict every single area. We identify the area, we wait for price to show us its intention again in the future, and then we have a very clear direction that we can trade behind. Of course, like I said before as well, we want to be utilizing the location tool in order to find the best locations and find the best ranges on the charts that we can play. Then we can increase the probability of our trades playing out. And when we see the intention coming into the market again, and we see the aggression and speed coming into the market again, we know the next phase of price after price has hit a sideways range. It's always that continuation phase, which means this is going to be the most profitable and the most volatile next move. And for us, when we're utilizing our entry strategies to get involved in these locations, we're going to be able to maximize our profit potential on these moves as well. And we can see this is happening over days. Prices come into this location on Monday. On Tuesday, we got that move away. On Wednesday, we got that continuation. And this is where our traders are able to take advantage of these moves here to the downside. Chuck's caught this continuation here and hit his 1 to 10 for continuation to the downside. And if you're thinking, how the hell do you get a 1 to 10 out of this small move here? This is a 30-minute time frame. If we can understand the higher time frame direction, the lower time frame is going to be building price delivery to support that higher time frame direction, which means that we're going to get continuation structure on the lower time frames. So Chucks is trading on the 1 minute chart, so he knows he can zoom into this price action here during London session, and he has very clear direction all the way to the downside. And like I said, all we're looking for is 30 pip moves. And we can see that price has moved 70 pips within this move here to the downside. So this is how we're able to understand the pattern of RAMC in order to give us an understanding of where price may react from in the future without guessing, but just identifying and waiting for price to show its intention again in the future. And now we have a very clear direction where we can see the intention playing out again before it happens. And this has given us a statistical edge within the markets where there is more likely to be one thing happening over another, which is the success principles of every single strategy out there. We want to stack the odds in our favor, and this is exactly what reading price action is all about. It's about making decisions at good locations and following along the correct intention within the market and having the correct strategies and processes to take advantage of these big moves that are happening on a consistent basis. Just before you go, here is a clip of all of the winning trades that we hit this week inside the NJT community. We had another student also receive his FTMO payout of over £20,000. We also have our brand new goal setting course video that is out now, and a brand new price action course video that is going to be out next week. We said last year that we are going to create the best trading mentorship in 2025, and these are all of the steps that we're taking to ensure that every single trader in our community is getting the correct support and has the absolute best opportunity to make profits and become successful in 2025. We are updating all of our knowledge. We've created a roadmap for you as well with 3 to 6 months worth of step-by-step instructions so that you can guarantee your success. We've increased the amount of webinars that we're doing so we can stay more connected to you guys and give you a lot more on-hand support. And of course, we're there every single session and available for you guys so you can ask any in-the-moment questions and get instant access to those burning desire questions, where in other communities, it's going to take weeks and weeks for you to get the answers, where you're going to get them instantly with us. So if you want to find out more, visit our website at notjustatrade.com. If you did enjoy this video and it did help you out, make sure you leave us a comment down in the comment section. Make sure you like the video, and we'll catch you guys on the next one.